Hi guys, welcome back to my channel. This is your girl 𝗀𝗀𝗻. The recent market can be described as extremely unstable. Market news is overwhelming. Exchanges are being sued, tokens are being defined as securities, assets are being frozen, and the US government is continuously cracking down on the crypto market, with the SEC Chairman Gary Gansler leading the crackdown. Usually, people don't pay much attention to what government officials say at conferences or TV shows. The entire cryptocurrency community is closely monitoring every move of Gary Gansler, carefully studying his every word and expression, because his influence on the entire crypto market is significant. Whether you like him or not, he is someone you need to keep an eye on. So today we're going to decode Gary Gansler's recent statements to see what are his true motives and the deeper meanings behind his words. Let me ask you a question. Have you ever had a desire to fully understand everything a professor says, like to grasp every word they say? Probably not. And I'm the same, not really a fan of the professors. But suddenly we have to do that now because it is so crucial to us. We may get an F for not listening. Many people may be unsure of Gary Gansler's stance now because his previous answers regarding whether Ethereum is a security or a commodity was ambiguous. But his attitude suddenly became very firm, launching a relentless crackdown on the crypto market and making accusations against multiple cryptocurrency agencies. First, let's go back to June 7th, when Gary Gansler was interviewed by the CNBC. You will be shocked after hearing what he said. By the way, if you want to know what will the future of crypto be like, trust me, watch this video till the end. And before we dive deep into the analysis, please give this video a like and subscribe. Your support means the world to me. I will share more exciting videos in the future. Gary Gansler initially explained why they decided to regulate and sue Binance.
Trading platforms, they call themselves exchanges, are commingling a number of functions which in traditional finance, we don't see the New York Stock Exchange also operating a hedge fund, making markets, and as we alleged in Binance, having a sister organization, flooding the platform with transactions called wash trading, and the lack of controls on the platforms is really a web of deception and conflicts, along with a control person, Mr. 𝗧𝗶𝗺𝗀𝘀, trying to evade US law.
The host first asked Gary Gansler a question, which is probably a question that many people had in mind. Cryptocurrency exchanges have been around for so long. Why are you starting to sue them now? The background to this matter needs to be explained. Well, in 2022, FTX faced a major collapse, going from being the second largest exchange in the world to hitting rock bottom. However, before this, FTX founder SBF had been involved in political donations, being familiar with various government officials, and donating substantial amounts, reaching tens of millions of dollars. Previous media reports revealed that over 1/3 of the current members of Congress have received donations from SBF, and FTX had employed several former officials from the US Commodity Future Trading Commissions. Additionally, SBF's girlfriend Caroline Ellison's dad has worked with Gary Gansler in the past, so SBF has considerable influence among US politicians. Now, you might have a question. Why didn't regulator agencies and regulate the crypto market before FTX faced its bankruptcy and closure? It was only after FTX collapsed and regulatory agencies started to intervene. That is the background of the situation. Then the host asked, why did it take you so long to sue these exchanges?
Say to viewers who wonder why enforcement has taken arguably at least several years, so long.
Look, it takes time. We do things by the book. That's what the American public would want us to do. We follow the facts and the law.
Next, the host asked they were going to freeze Binance assets in the United States.
Because if you do this, that's the end of Binance.
Look, we have concerns, and I think the investing public should be aware of putting their hard-earned assets onto these platforms. But we have concerns when a platform like this puts themselves out to the public, is consciously trying to evade US law and customer funds. You didn't even know who was custodying them. Was it custodied here in the US on the US platform? Was it custodied overseas? Or were some of your funds in crypto possibly moved to affiliates? There are a number of affiliates named in this called Merit Peak and Sigma Chain.
Based on the aforementioned reasons, Gary Gansler confirms that they will seek to freeze the assets through the court. Then comes to the controversial part. The host questioned why everyone can assign any value to cryptocurrencies, which seems to be based entirely on the greater fool theory. So what is greater fool theory? It refers to the concept that the price of an asset is determined by the expectations of the public. If people expect that the asset can be sold at a higher price in the future, the price of the asset will increase. Conversely, if people expect that the asset will become cheaper in the future, the current price will decrease. In this case, the price of the asset depends entirely on the sentiment of the market participants, rather than the intrinsic value of the asset. Gary Gensler's response is quite interesting. He claims that he doesn't care about the inherent value of the regulated entities, which means it doesn't matter whether cryptocurrencies themselves have value. What they want to ensure is enforcement neutrality. Now, we will move on to figure out the reasons behind the strong regulations and whether it aligns with the widespread notion of clearing obstacles for central bank digital currencies. Currently, there are numerous projects in the market, each claiming different purpose. But are there still people who uphold the original intention of cryptocurrencies? Satoshi Nakamoto, the founder of Bitcoin and proponent of anarchy, initially invented Bitcoin with a vision of a cryptocurrency that is not controlled by any country or central bank, allowing funds to freely flow globally without restrictions. Now, let's take a look at what Gary said in the interview's final words.
The whole business model is built on non-compliance with the U.S. securities laws. And we're asking them to come into compliance, and they're going a bit of catch us if you can. That's a sort of generalization.
The initial emergence of the cryptocurrency market was driven by a desire to escape regulation. However, cryptocurrency exchanges by their nature are centralized entities. In other words, on our path to decentralization, we have encountered something centralized. Should we regulate these centralized exchanges? And if so, how should we regulate them? The debate keeps going about centralization, and decentralization excludes Bitcoin from the discussion. No one argues that Bitcoin is a security. Does this mean the future developments are pointless? And that the original Bitcoin is the only true realization of decentralization. Now let's talk about Gary Gensler's stance on investing and staking. Gary previously mentioned that the reason why the US capital market have flourished is due to the Security Act of 1934, which was passed by President Roosevelt and the Congress. This has led to a thriving financial market in the United States, and cryptocurrencies should be subject to regulation as well. He referred to a famous case before the Supreme Court called the 𝗧𝗶𝗺𝗀𝘀 case. Let's briefly explain what this case was about. There was a landowner named Holly who divided his orchard into small parcels and sold them together with surrounding services. This attracted many investors who were not interested in growing fruits but saw it as a money-making opportunity. This case established that an investment contract must meet 4 criteria: money investment in common enterprise, and expectation of profits, and profit derived from the efforts of others. When it comes to staking cryptocurrency, many platforms give fancy names to financial products, such as earn stake and so on. However, the name of the product is irrelevant. Which matters is whether security regulations apply and what's the product's nature. Some media have pointed out that the current state of the SEC is, if I want to regulate you, you are considered as a security. If SEC wins its lawsuit and truly intends to destroy cryptocurrencies, they might have the capability to do so, or at least roll back the cryptocurrency market to 2010. There is disappointment with the SEC's actions because they haven't established appropriate regulatory framework, but instead are filing lawsuits against exchanges, which is quite embarrassing. Shouldn't the regulators clearly explain the rules that to everyone needs to follow? They believe that the SEC has completely failed in this regard. Don't worry, SEC is not the lawmaker. Christian Smith, CEO of the Blockchain Association, reminds us that the SEC is not the lawmaker. They can only express their opinions and make charges. The final decision is still up to the courts. So unless the SEC wins, the cryptocurrency industry doesn't need to worry too much. Well, to summarize, although the US regulations keeps cracking down on the crypto market, it would only be considered true repression if the SEC wins its lawsuit. We have also outlined the entire process above, so no need to panic right now. There's always light after darkness. Thank you so much for watching this video. Please hit the like and subscribe button. I will see you guys in my next video.